Good evening. Hope you all had a great day. Today the market edged higher due to improving China and US relations. The Dow fell 0.21% as they made a change to the index. The S&P 500 gained 0.36% and the Nasdaq rose 0.76%, even with shares of Apple snapping their 5-day win streak, due to Facebook gaining 3% and the trio of Amazon, Alphabet, and Microsoft all gaining more than 1%. Yesterday, the major index known as the Dow 30, or the Dow Jones Industrial Index, announced that they will be replacing 3 of its 30 companies that it is comprised of. One happens to be the oil company Exxon Mobil, which was the longest standing company in the Dow. The other 2 happen to be pharmaceutical company Pfizer and defense contractor Raytheon. All 3 companies had shares fall. The companies that will be taking their place is Salesforce, which is a cloud-based software company, biopharmaceutical company Amgen, and manufacturer Honeywell. As you can expect, the shares of the previously mentioned companies all rose by around 3% or more. This marks a notable change in the index, as Andy Cross, who is the chief investment officer at the Motley Fool, said, quote, "It's out with the old and in with the new," end quote. End quote. The Dow is trying to stay more relevant, end quote. The Dow Jones organization said that in their statement that they were prompted to change the index due to Apple's 4-for-1 stock split that would change the way the index would be weighted, as the index is weighted by the prices of shares instead of market capitalization. The changes, quote, "also help diversify the index by removing overlap between companies of similar scope and adding new types of businesses that better reflect the American economy," end quote. The removal of Exxon comes amid a global oil slump, as demand plunged during the recession tied to the pandemic lockdowns. Following its removal, Chevron will be the only oil and gas company left in the index. Last night, China and US officials had their meeting regarding the previously agreed upon Phase 1 trade deal. Both governments said that they are committed to carrying out the agreements which have been set in place. In fact, there are even discussions of deemed, quote, "significant increases" in the purchases of US products from China. As of June, China's purchases of all products covered by the trade pact totaled $33.3 billion, which were only around 47% of their year-to-date targets. Talks also reviewed steps Beijing had taken to protect American intellectual property and liberalize China's market for financial services. Talks also reviewed steps Beijing had taken to protect American intellectual property and liberalize China's market for financial services. Also, Beijing still seems concerned about Washington's push on sovereignty issues, such as those in Taiwan and Hong Kong. Regardless, the meeting seemed to be positive, as the relationship between the 2 world superpowers has been deteriorating rapidly as of late, and seems to be hanging by a thread. This Phase 1 trade deal is one of the few things that have been able to keep both of the countries tied together. In the month of June, the prices of homes stayed relatively similar when compared to the prior month. The S&P CoreLogic Case-Shiller National Home Price Index, which measures average home prices in major metropolitan areas across the nation, rose 4.3% in the year that ended in June, which is unchanged from the prior month. Sales of previously owned homes, which make up the bulk of the housing market, rose 20.7% in June from a month earlier, according to the National Association of Realtors, as economic activity started to resume and buyers felt comfortable returning to the market. Existing home sales have since surged almost 25% in July. A separate measure of home price growth by the Federal Housing Finance Agency also found a 5.7% increase in home prices in June compared to a year earlier. Phoenix had the fastest home price growth in the country at 9% and has topped the list for the last 13 months and was followed by Seattle's gain of 6.5%. The market was very mixed today, but was led by tech and healthcare, as both sectors gained around 1%. Oil and gas had a loss of more than 1.3%, even though gasoline future prices rose due to Hurricane Laura's trek through the Gulf Coast. Utilities also lost around 1%. Today was the inverse of yesterday, as all sizes of value stocks were in the red, while all sizes of growth stocks gained. Again, being similar to yesterday, core was mixed. The best performer in the entire S&P 500 index was clothing retailer Gap, which had shares skyrocket by 10.45%. This gain comes after Citi applied a buy rating on the Gap while it was previously rated as neutral. Citi cited there being unrespected value in the Athleta brand. Currently, the price target is $24 versus the average price target currently being $12.02. J.M. Smucker, which is a manufacturer of jam, peanut butter, and other food products, was the other great performer for the day, as shares rose nearly 6.9%. This gain comes after they released their tremendous earnings. Non-GAAP EPS beat by 70 cents, as the company had a gain of $2.37 per share. Revenue exploded for an unexpected gain of 10.7% on a yearly basis, as it had a top line of $1.97 billion, which surpassed estimates by $160 million. On top of this, their guidance for full-year fiscal 2020 earnings came in above estimates due to elevated at-home consumption from consumers and higher retailer inventory restocking. The worst performer for the day was technology retailer Best Buy, which had shares fall 4%. The company had remarkable earnings for the quarter as they topped bottom-line estimates by 62 cents, as they had a positive $1.71 per share. Revenue rose a respectable 3.9% on a year-over-year basis, as revenue finished at $9.91 billion for the quarter and managed to top estimates by $120 million. Shares fell after the company warned that the surge in sales is likely to be temporary. The other loser was luxury jewelry company Tiffany Co. Shares also fell nearly 4% as it was announced that the deadline for the merger between them and LVMH has been pushed back an additional 3 months. Getting into earnings, we'll start off with Medtronic, ticker symbol MDT, which is a medical device company. The company beat non-GAAP EPS estimates by 44 cents, as analysts were expecting a gain of 62 cents per share. Revenue fell a poor 13.1% year over year, but still totaled $6.51 billion and surpassed estimates by a huge $1.03 billion. Shares rose almost 2.5% after the far better than expected earnings. Next, we have Hormel Foods, ticker symbol HRL, which is a food company with products that can be found in just about any grocery store. GAAP EPS was beat by 2 cents as the bottom line had a gain of 37 cents per share. Revenue was in line with expectations but did rise 3.9% on a yearly basis, as the top line came in at $2.38 billion. The company did cite uncertain conditions for the next quarter, but they do expect the strong trends to continue. Shares fell by 2.09% after the non-inspiring earnings. Next, we have Salesforce, ticker symbol CRM, which is a cloud-based software company that provides customer relationship management services, among other software. Salesforce had a tremendous day. As was previously mentioned, they were added to the Dow 30, but their earnings were also very impressive. The company had a non-GAAP EPS of $1.44 and surpassed estimates by a huge 77 cents. Revenue exploded for a gain of 27.5% on a yearly basis, as the top line finished a quarter at $5.1 billion and came above estimates by $200 million. To add even more fantastic news, they substantially raised their guidance for the full fiscal year. Shares were up more than a gigantic 12% after hours. Next, we have Toll Brothers, ticker symbol TOL, which is a home construction company with a specialty in luxury homes. The company had a beat on both the top and bottom line. GAAP EPS beat consensus estimates by 21 cents, as they had a gain of 90 cents per share. Revenue did fall nearly 7% year over year, but was still $1.65 billion and came in above estimates by $130 million. Shares are currently trading higher by more than 3% after the positive earnings. Lastly, we have Nordstrom, ticker symbol JWN, which is a high-end chain of department stores. The company missed on both top and bottom line estimates, which has not happened often this earnings season. Non-GAAP EPS missed estimates by 4 cents, as they had a loss of $1.54 per share. Revenue fell nearly 52% on a year-over-year basis and missed estimates by a huge $540 million, as the top line finished the quarter at $1.86 billion. Shares are currently trading deep into the red after the very disappointing earnings. That is all that I have for tonight. I want to thank you for watching. If you could please leave a like and subscribe if you enjoyed the content, I would really appreciate it. Thanks again. I hope you enjoy the rest of your night.